Hey, good evening. This is Sam, and I'll be doing the free video for February 13th, 2020. So we're going to go into the last trading day of the week tomorrow. We do have a 3-day weekend ahead of us, so I do want to be a little bit cautious going into the 3-day weekend. Most of the things that I'm going to be looking at are pretty much setups that I'm going to be looking at more concretely on Tuesday. So I'm not going to be looking to put on a whole lot of new positions tomorrow, but these setups I think can carry us into next week. And as long as the indices hold up pretty well going into the weekend, coming back from the long holiday, then I'm going to be looking to put these trades on as early as next week. So I just want to show you a couple of things that I'm looking at here. So let's go ahead and kick it off with Zoom ZM. ZM here, I like the fact that it's trading now above this really critical level that I see at 89.63. You can see it's a Fibonacci level, but it's also been respected by the market as resistance. We did finally close above that level today, and we did so on above average volume, which I really like to see. One other thing that I like to see here on Zoom on the 130 is you have this compression, well, you have an impulse compression pattern here, which can resolve to the upside pretty impulsively. But to give additional weight to this pattern, you have a high compression squeeze here, which is the highest quality squeeze that you can have. It gives you the biggest moves. Um, so you have the right kind of pattern for a big move, and then you have the best kind of squeeze for a big move. So this is a 130-minute chart, and so I think this can go for about 4 to 5 days once it triggers. I'm looking for this to get into about 97 and a half going into next week. Another one that I'm looking at here is Team. There we go. Alrighty. So Team here. Combination of two things here on Team. You have this weekly breakout, which is really nice. It's trading above the previous highs there. It's not overbought on the weekly, so that tells me that it can keep going up and above through the highs. One thing that I like to see here is that you have a very good looking 130-minute squeeze starting to expand to the upside, holding trend pretty well on the 130. And once you get the squeeze expansion here, then it really is just a matter of time before you start to see it on the daily. So I'd be looking on Team here for a push above the recent highs there, a close and continuation on Team to about 160. So I like that setup as well. And one that I'm going to be looking to jump into as early as next week. Here's one that we did for earnings, and I took just a very small trade on this one. I wanted to do something that that played well with the expected move for Roku. So Roku had about a $20 expected move for earnings, and I just wanted to do something that if I got the direction and the move right, it would pay better than 1-to-1. So in that sense, I wouldn't do a put credit spread, or I wouldn't do a call vertical or anything like that. What I ended up doing on Roku is actually just 150, 160, 170 dollar call fly. So as long as it didn't get above 160 and kind of went in that direction, that call fly should work. It is $10 wide, so it's 150, 160, 170. It's $10 wide, and I paid $1 for it. So whenever you do something like that on an earnings trade, it's usually a good idea if you're going to take something like a lotto fly, just kind of like a, let's call it a high probability lottery ticket for earnings, that you put the odds in your favor, right? So with a 10-to-1 risk reward, even if you did those every time, the good thing is that when you do a 10-to-1 risk reward, you really only need to be right, not even half the time to see a profit. So if you get the risk reward right, the rest of the trade really does take care of itself as long as you get the risk reward right. So after earnings here on Roku, it has gotten to 147, so it's trading around 147 and a half right now. My fly kicks in at 150, So we're going to see if it will trade higher into tomorrow, but just the general movement in that direction should benefit the fly. I don't expect it for it to even threaten 160. So my strikes are 150, 160, 170. As long as it stays above 150 and below 160, that trade should do quite well. Even if it stays below 150, I should be able to get out for at least a double going into the open. So that's kind of the cool thing about doing trades like that, is that if you put the risk reward in your favor, and in this case I paid $1 for a $10 wide spread, so I'm getting 10 to 1 odds. So if I were to get $2, $3, $4, well, that covers any you're getting definitely more than 1 to 1, which is pretty good. One thing I'll say about Roku here is if it holds 147 after tomorrow, there's such a big squeeze here, not just on your daily, and don't mind that on the weekly there, but also on the weekly, that as long as it holds 147 on a close tomorrow, I would look for this to push into 160 as early as next week. This consolidation pattern here is so tight for Roku that just escaping that and creating that momentum will spark this squeeze and definitely can get you into 160. So that's what I got for you today, guys. I hope this was helpful. Just a little brief conversation as to something that we look at for earnings in terms of, having a bias for earnings, a directional bias, using the expected move in your favor, and then setting the risk reward for the trade in your favor so that when it hits, it pays, over 1 to 1, and when it misses, you took a high probability trade for a very low cost. In Roku, it will work out for us tomorrow. And just keep an eye on it. If it stays above 147, I like it into about 160. All right, guys. Hope this was helpful, and I'll see you for the next one. Have a great night. Cheers.